Hi, I'm Katie Guile with US Assure. A question for you. Why would a builder's risk client need an unsold dwelling policy for a new home? I'm going to answer that. Stay with me. We often refer to unsold dwelling as a third-year policy that you might tack on to the end of 2 years of coverage with the Zurich Builders Risk Plan. The reasons you might use one policy or the other, those can vary. So let's walk through the main features of the Builders Risk Plan insured by Zurich and the unsold dwelling policy insured by Zurich, so you can more confidently discuss coverage options with a personal or commercial lines client. To start with, what does each policy cover? Builders risk insurance is also sometimes called course of construction coverage. It covers a person's or organization's insurable interest in materials, fixtures, and/or equipment that's awaiting installation should those items sustain physical loss or damage due to a covered cause. The exact coverages and limits will vary by project type and value. But generally speaking, the Zurich Builders Risk Plan offers coverage for fire, theft, and vandalism, as well as additional optional coverages including soft costs, flood, windstorm, earthquake, and business income and extra expense. Policies may also cover damage to construction materials, temporary structures, property in transit, fencing, scaffolding, subdivision signs, and landscaping. Unlike builder's risk insurance, which is designed for the entire course of construction, the unsold dwelling policy insured by Zurich provides coverage for new residential construction that's either near completion or complete and waiting for sale. Coverages for this unsold dwelling policy typically include damage due to fire, lightning, windstorm, hail, explosion, hidden decay, weight of snow, ice, or sleet, and more. Make sure to check out the coverage form for a full list. Next up, who's eligible? A builder's risk policy can be purchased in the name of your personal or commercial lines client, from property owners to builders, contractors, house flippers, development companies, retail organizations, and school districts. That is not an extensive list by any means, but just a general idea. Eligibility for the Zurich Unsold Dwelling Policy is narrow, limiting coverage to new construction. Home builders and homeowners whose completed brand new home was previously insured under a Zurich Builders Risk policy during construction may be eligible for unsold dwelling, as long as they intend to sell and not rent the completed structure. Though we often refer to this as a third-year policy, coverage can also be available for the second year if your client's construction is complete or nearly complete and they would like to transition the policy. And if you need an unsold dwelling policy for other circumstances like a commercial building or after a tenant leaves the property, we've got a policy for that too. Next up, when should agents secure the coverage? Builder's risk insurance is a time of need policy, which means you need access to quote and issue as soon as your clients know they need coverage. Your clients expect a quick turnaround, and some may even need proof of coverage to secure a construction loan. As a general guideline, course of construction coverage should be secured before a project begins. While we may be able to insure a project in progress, other factors come into play, starting with the percent complete. Now, when residential new construction projects are almost complete, waiting for sale, or clients are nearing the end of their Zurich Builders Risk policy term, agents can apply for unsold dwelling coverage to protect the finished, unoccupied home. And if your home builder is insured under our reporting form, they can secure up to 2 years of unsold dwelling coverage. Just keep in mind that unsold dwelling under the reporting form is fully earned premium. Let's talk about a few additional details. There are differences in coverage and cost. Builder's Risk offers more comprehensive coverage that is designed to protect clients' interests during construction. And because the property value is a lot higher when the project is nearly complete, the cost of unsold dwelling insurance is typically greater. Lastly, while a residential new construction builder's risk policy is fully earned, unsold dwelling for one-shot new construction offers pro rata cancellation. When weighing the pros and cons of purchasing an unsold dwelling policy for the second year of coverage versus another year of builder's risk, be sure you and your client grasp the implications. Let's say your client is finishing their first year of builder's risk coverage and think they only need another 3 months. Transitioning to an unsold dwelling policy might be on your mind. It might seem they could save money paying for 3 months of unsold dwelling versus a year of fully earned builder's risk. But that might not be the case. They could end up paying more for less coverage if they opt for unsold dwelling rather than securing builder's risk for a second year. Remember, if a project covered under the Zurich Builders Risk Plan is complete at the end of its first year of coverage but hasn't been sold, you can request a renewal of the policy for the second year. And if you're not sure whether coverage has ended or will end, just consult the coverage form. But when 2 years of protection under the Zurich Builders Risk Plan are over and clients need a third year, consider unsold dwelling. Keep in mind, for higher value residential new construction, like around $8 million or above, a third year of builder's risk may be available with underwriting approval. No matter which policy your client qualifies for, review the applicable coverage forms to understand the scope of coverage offered under their policy. Not sure how other carriers stack up to the builder's risk plan insured by Zurich? Complete our free checklist to compare coverages. Click the link in the video description.